Today starts the day of US earnings, and we know that Alcoa will be under the spotlight, but we didn't have very good news that came through on Friday. JP Morgan cut its rating to neutral from overweight. So do you think that will be a bit of a dampener in terms of what we'll be seeing coming through from Alcoa from the earnings front?
The worst part of it all is it comes after the market, so really earnings season kicks off tomorrow, doesn't it? Although you'll see the futures market, I beg your pardon, catch up to wherever they think those earnings ought to be. I think, bearing in mind when you look at Alcoa, you've got to think about a recovering automotive sector, because remember they're a big supplier there too. So, and their outlook will be quite key in seeing where the US economy is going in the short term. But I don't think their numbers are as key as perhaps some a little bit later this week. You know, Intel I think is tomorrow, and then there's GE Friday, JP Morgan is on Wednesday. So quite a big earnings season to kick off, as there always is traditionally, because these companies always operate on the same sort of calendar cycle. So yeah, exciting that we're going to be driven by earnings related news and not all this hand wringing about Greece specifically. Although interesting, because in the Greek bailout specifically, remember that the euro dropped below 133 last week, and at that point I think there was something like a record number of net shorts, 85,000 contracts. So I wonder where those people are feeling this morning, because to be perfectly honest, the short-term Greek bonds were obviously, when you sell the bond off, the yield spikes. The yield had spiked something like 12% or something. Yeah, so this is 5% over 3 years versus what the short-term yields were doing, and they were comfortably above, I think, 12% or so. So it was starting to get a bit crazy towards the end of last week. So obviously the member states realized this and have put a proper package in place, because seemingly to raise 10-year money at 7.5%, 8% is ludicrous, because it's not about the raising the money, it's their ability to be able to service that debt at 7.5%, 8%.
Well, those yields are now coming down. Again, it's on the back of that package that you alluded to. So European leaders finally agreed on a 40 billion euro package, and they'll be paying interest of around 5%, which is far better than what they're paying, as you said, the 10-year yields at around 7.28% of what we've been seeing coming through from Greece, and a bit higher than the IMF, but we know that Greece was quite reluctant to go to the IMF for funding because a lot of conditions would be attached to that. Do you think that we'll be seeing the euro higher from what we saw last week? As you said, it hit around 133 last week, which was obviously dangerous territory, and people were getting quite pessimistic. Do you think those euro low days are over? Do you think that this is going to be the big solution that we've been waiting for?
Yeah, I'm not a great fan of watching currencies and trying to predict where they go in the short term. But if you look at specifically the growth in the Eurozone relative to the US, I think most economists are of the consensus the US will grow faster and will have less structural problems. So maybe that will give some underlying support to the dollar. But ultimately it's about the flows, because if you think of the world as an investable pot, I think something like 35% of that entire pot comes from the US specifically. So it matters where the dollar flows go there, and that's why you saw the dollar rallying strongly in the days in the late 2008, simply because of the repatriation of money. So every time you see a little bit of a sell-off overseas, ironically one of the currencies that yields the least, you see the flows go in that direction. So if the world moves to a spot where people start to take a little more risk on, and there's still a lot in money markets, then I suspect you'll probably see the dollar weaken off as people sell the dollar in order to place their funds elsewhere.
Sasha, going back to the US earnings, what are you expecting from these companies? We know that a lot of good news and a lot of optimism has been priced into the markets. Do you think we might be disappointed? As you said, Intel, GE and JP Morgan, the more important companies coming out later on in the week. What will be the turning point for you that will see markets going higher from these levels? In other words, the Dow Jones well above 11,000. Here in South Africa, we're over 29,000, something that's going to push us even further to 30,000.
Yeah, I mean, ultimately in our market, it's easy. It's high commodity prices, which we're starting to see. Absolutely. And that's more on the back of people, optimism globally, and the consumers of those raw metals globally are starting to step up. You know, you saw things such as a record number of ships off the Australia coast just waiting to get into the coal ports there. I think it was 223, which surpassed a record set in August 2008. So certainly the demand for raw metals exists, and that's what will drive our market ultimately, because the heavyweights are in that space. But it would be nice to see the company's outlooks improving, because it's not about the earnings ultimately, it's about how you see the future. And if people are expecting somewhere in the region of $77 to $80 on the S&P, so at 1,100 or 1,200, what is the right price? That probably is about right. Although I did note that Wells Fargo are looking for 1350 on the S&P by year end, so there's still a long way to go. If and we're looking for an extra 150 points from there, which is not nothing. It's an extra 12-13%.
Turning our attention to China, posting the first deficit in 6 years for the month of March, $7.24 billion, and almost, as for the sense that I'm getting from all that I've been reading about Chinese government officials, is that this is almost an excuse for them not to allow the yuan to appreciate, because it's proof that exports haven't really recovered as well as they hoped. We know that the deficit is mostly due to strong imports from oil, raw materials, and a lot of cars as well.
Well, exactly. So is the internal consumption story that they're so desperately looking for actually starting to happen in front of their eyes, and kind of giving them a little bit more ammo for not having to tinker with their currency? Ultimately, it's going to be about having to float their currency in order to make it completely competitive for everyone. Because remember that wages are going to rise in China over time, so they're not always going to be competitive having peg against the dollar. Now, I'm mindful that these currency stories are very short-term ones, because I remember reading in a book that was the history of Wall Street that there was a dollar peg to the pound back in the 20s, I think it was, and a dollar traded at 4.25 to a dollar, and it trades at 1.60 today. So these things happen slowly in front of your eyes and over time. It's just where the authorities want to see it in the short term. So I think the anxiety in the short term is about the developed world not being able to properly compete at a manufacturing level, and that's why there are these direct anxieties about the levels of the yuan.